Good afternoon, everybody. Thank you very much for joining us in our discussion on EMIs, e-money institutions. My name is David Landau, and I'm a partner at BKL Accountants, and I'm also head of our financial services team. We're all here today to get some insights into EMIs and the practical issues lying around them. Now, EMIs are rapidly developing worldwide, but especially in the UK, and this seems to be a huge growth area in the regulated world. Driving the growth are the rapid innovation in fintech, the acceleration of cashless payments, and a growing demand for payment services from small, typically entrepreneurial businesses, which is traditionally very much an underbanked section of the market. Now, in the UK, EMI licenses are issued by the Financial Conduct Authority, the FCA, and this allows electronic money institutions to offer a huge range of services. So these licenses have become very attractive for fintech innovators as they're much more flexible and they're less rigidly regulated than traditional banking licenses are. And more crucially, the application process, as I'm sure we're going to learn a bit later, is relatively quick and straightforward. So while EMIs combine innovation and convenience and present growth opportunities, there are also challenges. And the FCA's changing approach to regulation, as well as the more recent impact of Brexit, bring specific risks for EMIs in the UK. And the better that potential entrants into this sector understand the application process, the less likely they are to make costly mistakes. So, before we kick off, from an admin side, it may be helpful to know that there will be a recording which is available in a few days. And there will be an opportunity for questions and answers at the end of the discussion. The way that we're going to do that is if you please pop any questions you have into the chat box, we'll pick them up from our side and we'll try and address as many of them as we can within the time slot allocated towards the end of the discussion. And now let me introduce you to my fellow panelists. Firstly, I'm delighted to be joined by John Wedge, by Nick Andrews, and by Sam Robinson. John is one of my partners at BKL and is our head of audit, as well as being an FS sector specialist. John specializes in working with fund managers, asset managers, payment service providers, and fintech companies with advice covering audit, accounting, and structural issues, which include assisting with cash flows and forecasts for fintech regulatory applications. And although he doesn't look it, he's twice featured in Accountancy Age's 35 under 35 list, which I gather is a very impressive thing.
You're so kind, David. Thank you.
Nick Andrews is the executive chairman and founder of MPAC. MPAC are long-standing friends of the firm, and they're a boutique firm of FCA compliance and regulatory specialists. Nick has had a long and, dare I say, fairly distinguished 35-year career in the financial services sector that's included being on the board of a large securities broker-dealer, being head of credit at a UK banking subsidiary of a Japanese security house, and more recently being an independent non-exec at the UK sub of one of the largest US banks, as well as obviously many other leadership and compliance roles across the industry.
Thank you, David.
Sam Robinson is a qualified lawyer and a partner in the financial services regulatory practice at CMS Cameron McKenna Nabarro Ulswang LLP, known as CMS for short because it's quite a mouthful.
It's a great name.
Sam advises a variety of clients, including banks, asset management firms, broker-dealers, fintech businesses, payment institutions, and corporate finance houses on a broad range of regulatory and compliance matters within the financial services sector. Prior to working in private practice, Sam worked for 7 years at the then UK financial services regulator, the then Financial Services Authority, and is also a ranked lawyer in Chambers for advising the fintech industry. Welcome. So we wanted to try to bring together some of the key current issues in the sector and also share some of the real world issues that are affecting some of our clients. So maybe let me kick off by asking, how easy is it to obtain an EMI license? And Sam, would you like to kick us off?
Sure, yeah, thanks, David. Happy to go first. So, as you alluded to just now when you were into your intro, there's it is easier to become an EMI than it is a bank, but that doesn't mean it's particularly easy to get that authorization through. And I say that in comparison to where we may have been a few years ago in the authorization process. The FCA, it's a lot more difficult now to become authorized than it may have been a few years ago, and they ask quite a lot of questions during the authorization process. And while it is supposed to be a fairly quick, kind of within 3 or 12-month period, there are a fair few questions that they come back with, and you have to explain the model in quite a lot of detail to become regulated. So it is easier than the bank, but there's still a lot to do. So I think we're going to talk about a number of documents and the requirements and so on to become regulated. There's been a particular focus on the safeguarding and wind down plans, say recently, and that's off the back of a few EMIs going under. Obviously, Wirecard is the high-profile one, but there's been a few others, and there's new legislation, recent legislation regarding particularly insolvency arrangements for EMIs. So the FCA has got one eye on the particular issues that could arise if the businesses don't quite go to plan.
So that's actually quite interesting, because I think I'd understood you need to include your wind down strategy or plan within the initial application, which always strikes me as a bit odd, as you're applying for a license and at the same time you pop that in. Do you or does Nick want to shed a little bit of light on the rationale behind that?
I'm happy to. The wind down plan is relatively new going into the application process, but it's pretty complex. They are requiring not just a simplistic, orderly wind down plan, i.e. we have decided that we can't make any money out of this, let's close the firm up, etc., etc. They also want a disorderly wind down plan. That's when something has gone horribly wrong, a Wirecard type example, or something else. And the problem is that there's actually 2 EMIs being wound down at the moment, and the plans haven't worked. The release of the safeguarded money, which should, in theory, according to the rules, be distributed out to the owners of that money, i.e. the clients, doesn't work in that time frame. Actually, what we're seeing is the costs of wind down are escalating significantly because of the insolvency practitioners' costs and everything else like that, which is depleting the safeguarded amounts. So what we're expecting is the FCA is expecting more capital. They talk about liquid assets to be able to support those costs, to be factored in, exactly as Sam said, in those capital calculations for the future wind down. So it's suddenly got more expensive in capital requirements.
Okay. And John, have you got any observations you'd like to share?
Yeah, well, we've actually been assisting a number of clients prepare these. And they're not a quick, easy fix, and you need to give them sort of proper thought and attention. So you need to build in some reasonable assumptions about what costs can be removed and at what stage of the wind down process they can be removed at. But then there may also be penalty amounts due from breaking of any arrangements that the business may have in place that you have to think about as well. And where appropriate, you should even include the cost of an administrator or a liquidator when appropriate. So yeah, we're seeing, again, as Nick said, the 2 scenarios, one for an orderly wind down where the directors have chosen to wind down the business, but another based on some kind of catastrophic shock event, maybe like the loss of the payment rails or a huge loss of customers. And you have to prepare forecasts on that basis as well.
So clearly it's an expanding and an ever-increasing sector. And one that I think the FCA certainly seems to be paying more attention to. What have been the practical problems and the main objections arising out of some of the recent applications that you guys have all been pushing through? John, do you want to kick off on this?
Yeah, happy to. I mean, they're certainly scrutinising the applications much more closely. and really delving into the business model, as Sam alluded to earlier. So a lot of this revolves around the business forecasts we've found, and the way that we kind of try and mitigate this or help the situation is to build them with as many sort of assumptions and variables in as you possibly can, because then you're able to stress and tweak the assumptions. Say, oh, what happens if we don't take on as many clients as we initially expected? What happens if the transaction volumes aren't as high as we expected? And you can really play around with this. That leads on to the forecast. Then will always calculate the capital adequacy based under the 3 methods. Depending on what the business is doing. And then generally speaking, there's a lot of discussions with the FCA around those calculations, and then perhaps, well, what they may want in addition. So those calculations might form your base requirement, but you may have to be prepared to put more capital in on top.
Okay, thank you. Nick, have you seen anything on the regulatory side with kickback from the FCA?
Yes, there's as John alluded to, there's greater demand for in-depth review and analysis and complexity over the whole thing. Simple example, as John was talking about in the numbers, it would have been thrown in, this is the number of clients, this is what we expect to make, etc. We're now going down and we're now seeing questions regarding the foreign exchange rates that you're projecting on when there are unusual currencies there. The last one we saw was Kenyan shillings. It actually makes it impossible to become an efficient payments provider with Kenyan shillings, which is a depleting currency. And with the minimum amount of a foreign exchange transaction you can have, it killed the business from a financial point of view before it actually started. That complexity comes across in various other ways. There, I think that the FCA is beginning to apply certain other standards which aren't in the application process, but for example, the senior management certification regime on the FSMA side, the securities side. We've started to provide responsibility maps, which are a requirement for certain of those firms under SMCR, because it kills the question, and the questions that we are beginning to see coming from the FCA is who is responsible for this? So it's governance gilt-edged, and to be able to provide those responsibility maps and flush out who is actually looking after which function within the entity. And the reverse of that, if you also apply onto the map, is how does management information and alerts get escalated up? By the way, escalated is a buzzword of the FCA, so do use that in your application quite regularly. But we use that in the responsibility map because it's then pictorial and they can see it, and it's much easier to do that. And of course, it's learned from the SMCR world.
Have you found, Sam, I mean, moving across from that, is there a lack of appropriately qualified candidates to be leading this? And are the FCA sometimes kicking back on the quality of the senior managers who are putting themselves forward to lead these businesses?
Oh, that's a controversial question, David. Very controversial to get us going. I suppose the answer is, if we kind of just take a step back and say, why has the FCA kind of changed its approach slightly, not just to EMI applications, but to applications across the board for whatever firms are looking to do. And a lot of it stems back from, say, the London Capital and Finance review that took place. This isn't a webinar to talk about that and what happened there, but for anyone who hasn't read it yet, it does pick up some points in where the FCA could improve. And one of those points that was flagged is that they should be looking at a business more holistically rather than looking at just the regulated entity. So there's questions around the group arrangements, for example. As they say, there's more questions around viability of business models, as Nick and John mentioned already. So there are a lot wider questions coming through the process than there may have been kind of a year or two ago. And that includes in regards to individuals. They've always asked questions about individuals. That's not a new point. But as Nick mentioned earlier, that say whether someone has the experience and the knowledge, say, whereas before a short answer may have been enough, now actually they're asking for a lot more questions about people's experience. But you quite often find that they're happy as long as there's a board that between them will have all the knowledge and experience, because someone will bring regulation, someone else will bring the tech, and so on and so on. So as long as, say, as a business and as a board overall, people have the relevant skills, then that's helpful and actually quite good governance.
I'll add to that if I may, David. There's two particular roles that they focus on, and is there somebody at senior level who knows the payment sector? Those sorts of people are around, they are available. The second one is, do you have somebody who knows the reconciliation part of the safeguarded piece? Now, those people are like hen's teeth, very difficult to find at a reasonable cost. Whether your technology is managing the reconciliation process, somebody still needs to be eyes on it and do a manual piece to be able to reconcile that on a daily basis. The expectation isn't longer than that just because you don't have any flow going through, or it's minimal flow. Do it every day. You have complexities in different currencies, which is a nightmare. The US dollar, your reconciliations don't come through until 10 o'clock at night. Getting that reconciliations person to work on it, difficult one underneath those safeguarded rules. So that particular role really needs to be thought through, and as I said, they're very difficult to find suitable people there, particularly in a startup. Why do I want to join something unless the license has already been given? That's the issue.
So trying to bring that together a bit, the application process clearly essential to try and push this through in a reasonable time frame. The quality of the data that you submit obviously pushes it through, and perhaps most importantly of all, the quality of the people who are within the organisation or the proposed organisation will be of importance in ensuring that the licence is actually finally issued by the FCA. Let me try and move this on a little bit and maybe move on to probably what was last year, other than COVID, the big talking event in everyone's diary, which was Brexit, which apparently finally happened. Clearly, Brexit has brought new challenges. It's brought new challenges in every industry, but particularly in the regulated world. And also, I'm guessing in EMIs particularly. So, have there been any? What would you all perceive as the new challenges, and have there been any opportunities as well? Maybe John, you could sort of give us a view from a tax and maybe VAT perspective. What do you think have been the key issues you've seen arising out of Brexit, and are there any common themes you'd like to share with everyone?
Yeah, I think the most common thing within the financial service sector is the changes to VAT. Now, VAT is always relatively complicated in financial services anyhow, but the main change is actually, generally speaking, a good one, and that is when the UK left the EU VAT area, it became a third country. So any financial services business that was using a partial exemption special method to recover any input VAT saw an uptick in the amount they could recover. And this was essentially because the EU customers moved from the exempt pot into the taxable pot for the purposes of calculating the amount of input VAT you could get back. Again, just more widely in financial services, I think the reverse charge rules on buying in services from outside the UK, they remain a key issue. And we're seeing it as a recurring issue for payment services and electronic money firms who are often buying in services from all over Europe or the wider world. So definitely need to check VAT status.
Okay, but possibly some opportunities to recover VAT in this sector, which I think lots of people often miss. Absolutely.
It is very complicated, VAT in financial services, and it really does depend on the detail. And it can be very important to a business model, particularly if there's going to be an extra 20% reverse charge suffered that can't be recovered. And I mean, we've gone as far as getting council opinion on certain business models and structures and where the VAT lands.
Thank you. Sam, what about on the legal side? What common areas and issues or themes have you been encountering as a result of Brexit?
Sure. So we had quite a busy December, you could say, in the run up to Brexit, and getting firms ready. A lot of firms now have an EU entity and a UK entity to service their UK clients and also European clients, or are agents of one or the other in order to offer the service both in the UK and Europe. And I see a question that's coming already in regards to the use of appointed reps or agents in this model, and saying people can say, become an agent, and that allows them to, in effect, piggyback off an EMI's permission. So that is a model that people are using, say, in the UK and overseas. So Brexit was busy in that sense in relation to getting people to provide the right services to the right entities from the right entities within their group. What I might do at this point is I'm just going to share a link. So to those that may not have seen it, this is the document that was produced by the 3 presenters that you have on your screen in relation to various different parts of the EMI activities that we're talking about today. And in the section that we at CMS drafted, there is a reference to Brexit and to do with kind of safeguarding accounts and so on and points like that. So I'm not going to take up all the time talking about it here, but you've got the link there to read it if that's helpful.
Thank you. Nick, have you got something you want to add from the
Sure.
regulatory angle?
I do. There's two particular pieces there. It used to be relatively easy to get an EMI license in other jurisdictions. Ireland as a prime example, in Dublin, that has now become much harder, and it's taking actually longer than the FCA to be able to do that. Lithuania is the other country which seems to have a lot of EMI licenses. They had a good clear out about 2 or 3 years ago and closed down hundreds of them, which was a good thing, but they are back, and I seem to get emails quite regularly. Would you like to have an EMI license? We can do it in a month for not a lot of money in Lithuania. Be very careful of those sorts of offers. Now, that doesn't necessarily mean the good offers of going to Lithuania are still available, but the dubious ones. Why? Regulatory arbitrage. It's what we see quite regularly. I've got a footprint here in the UK, which does tend to gilt edge certain parts of a business, particularly financial crime and the AML take-on piece. And then you've got a footprint in Lithuania, which has a lower level to that. So the salesman comes along from your technology business, you know, the inbuilt AML. We can do it with not a lot of money. We can do the technology. Make sure it meets the UK regulatory requirements, because if you've got that in your group, the FCA can and do say, so you're willing to take on a criminal over there, but not here in the UK. How does that work? And then you have a problem, or you have a potential problem. And we have seen that. And that means that you, because money can be then mixed between the two entities, you've got a much bigger problem. And just a little point on the other bit that I said there, never trust a salesman when they say that it meets the UK regulatory requirements. It's your board's obligation to check that it does. You'd be amazed how many firms are running the technology which is not meeting the minimum standards of the Joint Money Laundering Steering Group. And that is going to cause problems, as we referred to right at the very beginning, that the application process has got much harder, but so has the supervisory part. Whereas it used to be reactive on the supervisory part, it's now coming to the forefront. So your ongoing monitoring processes and checks have got tougher. And if they find these sorts of gaps, good luck. Call Sam, John and myself, will come and sort you out, is the answer.
Lots to think about. One of the positive upsides, I think, that our Prime Minister had said would be Brexit would lead to more freedom for all of us in terms of doing business generally. And I'm just wondering whether any of you had seen more freedom in terms of rules and regulations and practically in terms of operations. And what are you seeing that's happening at the moment? Sam?
Trying to think, David, I think maybe it's a bit soon in a lot of ways to see any real changes. So there's been some legislation that's come through, as I said earlier, on the insolvency side, and the FCA has been making, say, points around disclosure and so on, but that really emphasise what the requirements are at the moment that are in place. There's been some tweaks to the legislation that allow firms to do different things. For example, it's in the document that I shared earlier, we refer to the fact that a safeguarding account can now be with any OECD ESG country firm rather than an EU firm, which is potentially a wider group of countries there. So things like that, there have been some tweaks. We haven't seen them really being used in that way, but there have been some tweaks around the edges, so to speak. But nothing that I'm aware of that has been, say, groundbreaking in the sense of where we are today as to where we were in December.
Okay, Nick, anything on your side?
I think Sam hits a very good point there of the credit institutions, which you are required to have for the safeguarded accounts, are very, very difficult to come by to get those sorts of accounts. And why is that? Credit institution can make no money out of it. They can't take fees from it because it's not their money. It comes out from the corporate account. It's risk. How are they going to deal with that? Is it on balance sheet or off balance sheet for them? That's an accounting question. That's quite a thorny one for these sorts of things. There's 37 OECD countries. I really don't think the FCA is going to be pretty impressed if you have a bank account in Colombia for your corporate money. And of course, your capital has to be held in that credit institution. It can't be held in an EMI or something like that. So those are loosening up and having, well, Canada is an OECD. They've got some good banks who are accommodating for these sorts of things. It's a shame that bank accounts are so horrendously difficult to get. It's another top tip there is start the process before you even put your application in, right at the very beginning. Bank accounts are very hard to get. And I think the second point is I can be quite opinionated over this particular piece, is the smothering effect of the rules and regulations that we have had from Europe for such a long time. The FCA is still repeating that to an extent. We've seen that in financial promotions. Conceptually, at the moment, how do we use an EMI? It's on your mobile phone. I would suggest that we had a straw poll on this. How many people read the terms and conditions? How many people know where their money is actually held? I do. I have to read them for a living, and I'm sure Sam does as well. People don't think about reading 12 or 20 pages of this, so it needs to be made much better for the way that people are using it rather than the way the rules are saying it, particularly regarding the financial promotions. And that came out from one of the Dear CEO letters just recently, aimed at the EMIs. Make it really clear what you're doing. Don't use the words banks. You're not a bank. You don't accept deposits. There's another one that comes from the reconciliations. Electronic money is not a deposit. If you hold it as a deposit, you're a bank, and you could be outside of the rules there. So I think that firms can be pretty smart about thinking how that message can be delivered without having to provide 17 pages of terms and conditions that nobody reads. Thank you.
John, is there anything that you want to add on this one? Or have we thrashed it to death a bit?
It has been a bit, I guess. Maybe just a general point. I guess I wouldn't expect things to get dramatically sort of more loose or more free, I guess, because the FCA's main concern is going to be the protection of clients and safety of client funds. So if that's going to remain a priority, I can't see there being a massive loosening of the rules.
Okay, maybe picking up on some of the things that were said a bit earlier, Brexit's clearly meant that we can no longer passport out of the UK and just trade across Europe generally. So I know that we've seen as a business structures have got more complicated with subsidiaries based in various jurisdictions. Does it also make complying with the regulations more involved and more complicated as well? And I suppose what I'm trying to get at is, are there maybe common software platforms which facilitate businesses being able to trade in different jurisdictions quite well? Are there common countries? I know a bit earlier, I think, Nick, you'd mentioned Lithuania was particularly a popular destination to gravitate towards. What have you seen, or what are your thoughts?
There's a lot of one of the huge benefits of this change over the past few years is the quality and the cost efficiency of technology, which is pretty impressive. There's one firm out there, on Fido, which is facial technology of recognition and AML stuff. I see they're having a private placement at the moment, which is valuing them at a huge amount. Years ago, when the retail derivatives were really at the forefront of the internet-based sales pitch, it cost about $200, $300 to take on a client using the AML. That's down to not a lot, a handful of dollars for an individual, because the technology and the source document, the source data, is much more accessible and much better. So yeah, that's on the front end. There's a lot of back end technology which is pretty smart. We're going to be seeing quite a bit of real-time settlement stuff coming out using distributed ledgers. There's 3 or 4 firms that I'm working with at the moment which is doing that. And then there's the bit in the middle, which is your platform, your CRM, and your distribution of all of this sort of stuff, a lot more efficient. So that's good. You have to be very careful coming to your beginning point of that as to in which entity does it sit. You might have a common platform, but it needs to be managed correctly from a governance point of view. This one serves the UK entity, and this bit serves the Lithuanian or Italian or French entity, and those sorts of things. You might have common directors, but you've got to be able to manage that technology and have the responsibility in the required regulated entity in the UK or wherever else it may be.
Thank you. Sam?
I haven't really got much to add. I think Nick covered everything there excellently. I suppose one point, say, in regards to identifying customers on the platform, so a lot of firms will be able to work that out via their kind of, say, territorial access points and IP addresses and so on. So then they go down different routes and enter into contracts with the UK firm or the overseas firm or so on. And then at the back end, they're using on Fido's and the others of the world to provide the back office services and so on. But say Brexit has brought that along to the table, so to speak, in being a bit more organised, where you do have one platform that's accessible, say, from more than one jurisdiction.
Thank you. And John, I'm picking on a question that's just popped in because I think it's vaguely topical on this one. And one of the questions was, can we buy a license from an existing provider? I know that I'd seen a client of mine who'd managed to make hay out of this. They were going to shut their business down, and there's been there was a sales pitch for their license, and they managed to sell their license on to someone else. Is that something you've seen, or have you seen any common themes or territories?
We have seen it sometimes. I mean, just first ones off the bat, I think with the Netherlands, they got themselves pretty well organised for kind of allowing UK firms to set up in the Netherlands, closely followed by Ireland, seem to be the most popular destinations. In terms of buying a license, yes, technically it is possible. I guess you've got to agree a price, and other factors to consider are, you know, when you buy a company warts and all the history that's come with it. And I guess, I mean, the guys can explain or comment on this better, but there's going to be change of control issues here. You can't just rock up and buy an FCA regulated business and hey ho, you're good to go. There's going to be processes and procedures that need to be gone through with regulators before you can acquire.
Can
Okay.
I also something in there, Dave, on that?
Of course.
There's five EMI licenses for sale in the UK at the moment, and why haven't they been bought? Well, the simple reason is when you want to buy this, exactly as John says, you've got to go through the FCA. So if you actually think about the time frame, why do you want to buy it? You pay a premium to save time and get there quicker. To put that application into the FCA, it's called changing control, requires a business plan, projections. You've got to do all of the sort of stuff that we've just talked about. But you've got to do your due diligence. Firms will often go to a law firm and an accounting firm to do that. Great firms, got 2 of them here with us. Very good at doing the due diligence on the legal side, very good at doing the due diligence on the numbers side. The bit that will actually send you to prison and will cost you money is failing on the compliance side. And that's why these things are so, well, haven't been sold. I think you could say they're dogs. They have got big problems in there, and that's why everyone is turning their noses up it. So when you look at that premium to actually purchase one, it's what's 350,000 of capital. You're going to have to put in a lot more capital. You're buying the clients might not be doing anything. Do your due diligence. You might have applied and got in a quicker time frame a brand new squeaky clean one than you will have been able to purchase one.
That's very helpful and quite interesting as well. Thank you. And I hope that answers the question that was posed.
Just to add to that, David,
Go on,
just one further point, just to add to that as well. The FCA's are quite clear that the change in control is you're acquiring an existing business, and are supposed to in effect carry on that existing business as a new owner. If you're buying a company with the intention of doing something completely different, then they don't like it if you're just acquiring a controller as a kind of way to avoid going down the whole authorization process. And they may query whether you should actually be applying for a fresh license rather than acquiring a business that's done something completely different in the past during the controller process. So there is that point to think about too whenever someone's thinking of acquiring a business that's on the market.
Thank you. I think all this proves is good professional guidance on all levels is essential. I think it's caveat emptor, let the buyer beware. I've heard some apocryphal tales, I don't know how true they are, that EMI applications have been used as a software, if you want, of allowing businesses to offer clearing banking services. We've spoken a little bit about safeguarding very briefly, but have you got any practical experiences or thoughts you'd like to share? Should there be stronger client money accounts within EMIs? And should the safeguarding restrictions be improved, or open to any of you?
The difference, as I said before, between a bank and an EMI or a FISMA firm with various others is a bank can accept deposits, and that's placing money with a view of it just sitting there and I'll spend it one day in the future or withdraw it or earn money on it. With the electronic money firm, it's an electronic wallet, which is not a deposit. It has a purpose to be used for something else, a payment at a later date. So that there is a very fine line between those two pieces. And as we've said as well, is the FCA is getting very, very grumpy about firms using the word bank. The word bank is actually a protected term in anybody's name, hence Rails Bank is pushing it somewhat perhaps, but you have to be very careful to not hold out and portray yourself to being a bank or offering banking services.
Anyone else, or are we covered?
Well, no, I think you do have to be aware these things can often look and feel like a bank account, but as Nick says, they're definitely not, and they don't offer the same protections, and hence the DCO letter, which I think Nick referred to as well. But I guess you can see why they exist. I mean, they serve an underserved part of the market, and they fill a hole where traditional banks won't bank the SME sector particularly well. They kind of are moving in and bridging that gap. I think that's why they've come into existence and why they've grown so fast.
You. Anything to add, Sam? Or
well, again, coming back to the difference between an EMI and a bank, the EMIs are supposed to safeguard the funds in an account or have an insurance policy, say, to cover those funds. So that's the two options that are available. I'm only aware of one firm that provides the insurance cover, so everyone else goes down the safeguarding route. So in theory, the money should be there for everybody who came back to get the money at any one day. Then the money should be there in the safeguarding account to be claimed. Obviously, a bank is different because, as Nick said, when they're accepting deposits, they don't keep that money. That's why you have runs on banks, because the money's not there, and for them to actually go and get it because they're lending it out via mortgages and all other routes. So there is a difference in the model between what an EMI can do, what a bank can do, and that's why you quite often see firms be an EMI to start with, and then they in effect want to become a bank, because then they can use money that they're taking in to do other things and to be profitable in other ways rather than keeping it in the safeguarding account.
That's very clear. Thank you for clarifying it. We've looked at the past, we've looked at the application process, we've looked at where we were. I thought it might be helpful to try and look forward a little bit as well. So from a, I guess, navel gazing or crystal ball perspective, What do you think the key changes coming to this sector over, say, the next 12 to 24 months may be? The good news about this is it's only your thoughts, and obviously it's what you think might be on the horizon. Sam, do you want to kick us off on this one?
Sure. So payments is, say, on the FCA's radar and EMIs. It's one of their priorities in their business plan for work in the next, say, year or so. So, and the fact that there's been a few DCO letters and compliance officer letters, you can see that they are looking at this area, and it's been well publicised with Wirecard and others that have gone under. So I think we can consider that there will be further correspondence from the regulator in this area. Say, to make sure that firms that are carrying us on have adequate business models and safeguarding arrangements, and other areas that Nick and John have mentioned earlier, say, during this presentation. So I think we can continue to see more of the same. But there are new rules coming in. So I mentioned these solvency rules a couple of times already. They're changing, say, some of the guidance that's been consulted on. So there are some changes taking place in regards to the regime generally. So we will see a few changes. But I can't think of anything that I've heard of that will greatly change the scope, for example, of what's regulated and what's not.
Thank you. John, what can our clients best do to maybe prepare themselves for what may be coming?
Well, I guess we're seeing greater scrutiny at the application stage at the moment. That's already kicked off. So I guess extrapolating that, we can probably see greater scrutiny on an ongoing monitoring basis. I mean, I would say this as I'm an auditor, but I would expect the audit requirements, particularly around client money, to probably be tweaked or maybe strengthened up in the EMI space, as it's not currently as strong as other areas of CAS, for example. So I would expect to maybe see some tweaks or kind of tightening up in that area.
Thank you. And Nick, have you got anything you'd like to add to?
Absolutely, and strangely enough, somebody's just asked a question, which was part of what I was going to answer as well. Technology. We're very, very good at technology here in the UK, and the speed of innovation, which is causing a completely different structure to the way that EMIs are working. But they're having to innovate that because it's a competitive market and the costs have reduced significantly. Foreign exchange spreads have disappeared. Thank you, Revolut, from a couple of years ago. That changed the market completely. So that line of profitability disappeared. As I mentioned earlier, we're going to be seeing real-time settlements coming up. That nightmare of having to be able to settlement to reconcile in currencies outside of the UK typical banking hours is changing. We're fortunate, we've got a very innovative clearing bank here who is driving some of this stuff. And then that comes to the question that's just been asked, crypto. We are seeing, well, that particular question is, can I apply for a crypto license at the same time? It's actually a registration, it's a 5AMLD registration to be able to execute or hold these sorts of things. But have a look at Ziglu, which is an EMI that was approved. It's all in one. They're both in that company, the crypto and the EMI. So they can actually offer Bitcoin as a separate currency. It's no different. So on their, in theory they can, they haven't launched it yet, but that's the objective. And we'll be seeing some more of these sorts of things. However, I have seen the regulator want to have the crypto license in a separate entity to the EMI, not what your business strategy wants. So you need to be suitably robust in your attitude to that, to whoever the questioner is. I'm sorry, I can't read their name from this distance. You need to be very robust about that sort of process as to why you want to be able to do this and offer these other currencies. So I can see that certain cryptocurrencies are going to not necessarily become mainstream, but become an additional currency that you can use as a payment means, and likely to be Bitcoin and Tether and a couple of others that we're seeing are coming up. And certainly that will also be changing the way that banks think, because they tend to close you down here if you have anything crypto. Even though they've got plenty of crypto flowing through their books and records. But that's a separate subject on crypto, but it's related to the question and your point, David.
Thank you. Interesting to see the interreaction between crypto and this sector.
Yeah, and the link there, David, as well, is a kind of a watch this space for central bank digital currencies as well, because they are, say, if you want an EMI, then it's probably worth keeping an eye on there, because they will be a game changer for this space, and as and when they are developed in the future. So in regards to what's happening over the next 12 months, it might not be 12 months, it may be longer, but it's definitely one that the industry should keep an eye on.
Thank you. Mindful of time, I've seen a few questions popping up in the chat box, lots of which I think we've probably covered already. One I don't think that we necessarily have at the moment. So, well, one of the earlier questions, are fintechs such as Revolut moving too fast? Are they breaking things? Does anyone, I thought it was quite an unusual question. Are they breaking the system? Does anybody want to try and answer that one?
Yeah, happily. They applied for a banking license and were refused it. I think that says it all. Yes, they've moved very, very quickly. Their technology is not kept up. There have been reviews of their, or the FCA has had some certain deep dive investigations of them. You know, building it too quickly without the foundations, dangerous territory.
Okay. Different licenses. I think we've probably covered most of the other questions that popped their heads in. So
there was one question, David, which was, you referred to it, which was appointed representatives in the FX derivative world, but the equivalent here is the agency world, which we haven't really mentioned, where we in the UK are pretty innovative about that. There are a number of principal EMI firms who have a lot of agency, borrowing that particular piece as a way to get into the EMI world in a quicker way. That's an interesting piece as well. I don't think that there's many other European jurisdictions that have the equivalent to such a developed space as we have here. It's quite complex because there's different service offerings that you can buy with the APIs that go into it, but generally they're plug and play. But it's very interesting models.
Thank you very much. I think we've probably covered the points. So maybe I can finish off with a last question, if I can, to each of you. Maybe Sam, you want to kick off. If you had a top tip and one only you wanted to share with our audience about EMIs, what would that be?
I would say for those that are starting out, say, and planning the business, it's useful to spend a bit of time on the business model. And it might sound like an obvious point to say, but the FCA asks questions that you might not think are directly relevant to regulation, but because they're querying the model generally. So how are you going to make money? And as Nick said earlier, regarding the foreign exchange spreads and so on, points like this, which are going to come up during the process. So it's probably useful to spend a bit of time, maybe submit an application a week or two later, but make sure it's that bit better before it goes in, so that then once a case officer is assigned and you start the questions, it's a much easier road to authorization for when you go down that. For those that are already authorized, then I think it's clear from the various points we discussed already and the FCA's letters where their focus is. So to be prepared for various, say, questions or thematic reviews that might arrive in this space to ensure that you're compliant with those points. So that's for those that are currently regulated. And then, of course, looking at the future and the points that we've mentioned already to keep up to speed with developing technology, so where you can improve your business to remain competitive, and legal developments. We've touched on VAT already, but there's other changes, just general changes that might not be directly relevant to regulation, but impact the business regarding employment or corporate law and so on, which are also going to impact the overall business. So there's a fair bit for someone to look at and to keep abreast of as they go forward.
Okay, thank you. John, top tip.
I guess some of it's going to be a slight extension on Sam's, but I guess it's be prepared for scrutiny. And Sam mentioned the business plans. Great point. The more detailed and in-depth the business plans are, the easier the forecasting then becomes, the building in of the assumptions become, so that they can be properly interrogated and looked at. Just another one, I'm going to go to two, because Nick's mentioned a lot of tech solutions. Now, a lot of these solutions may not be provided from the UK. Again, they may be provided from outside the UK, which brings in the dreaded reverse charge VAT rules. So bear that in mind.
Thank you. And finally, one and one only, Nick.
I'm from compliance, so you always get, and it depends. I wrote down and just thought, think carefully. That's my top tip. But what does it mean? It means what we've all been saying here is the minutiae will create the hurdles for the future. And Sam's tip is the one that we always tell people when they come in the door, is spend the time to have a full-blown, full-fat application going in, where you've killed the questions that the FCA are likely to answer, because you've gone down into that minutiae. You know, the listening part is, the FCA has certain specific pieces that they ask for. The customer journey, that's not 3 blocks of, you know, one to one. It's how does money move through the system? How does it touch the technology, the accounting, the books and records, the money, all the way through. Most people, when they set up an EMI, have specialisms in payments or in technology or in something, but there's the other factors that need to be interrogated as well. So get it right before it goes on, saves the case officer a lot of times and questions, and saves you a lot of money at the end of the day.
Thank you very much. So I suppose in summary to that, I've got the Boy Scout, be prepared. Take appropriate professional advice on your legals, your accounts and tax, and your regulatory side. And perhaps most importantly of all, pay attention to the detail and make sure everything is properly documented. And I think we're probably out of time. So firstly, thank you very much to all of my fellow panelists, to John, to Sam, to Nick, for your time and advice. I think it was very informative. Judging by some of the questions I've seen come through, seems to be there's some feedback already that other people think the same. So there's lots to take away for some further thought. And secondly, to everybody out there, a very big thank you to everyone for listening. I know that we all hope that you got something out of the discussion, and please feel free to get in touch with any of us if you've got any further questions, or if you think we're able to help you with a practical issue that you're facing, and we'd be delighted to talk to you. And other than that, enjoy the rest of the day, and I hope the football match is as entertaining as this is later on tonight. Have a good afternoon.
Thank you all.
Thank you, everyone.
Thank you. Thanks, everyone.